De-dollarization. It's a word on the lips of economists and world leaders alike. But what does it really mean? In simple terms, it's the process of reducing reliance on the US dollar. Countries are looking for ways to conduct international trade and finance using other currencies. This could involve using their own national currencies, adopting regional currencies, or exploring digital alternatives. The goal: to create a more multipolar financial system, one where no single country holds all the cards. This movement is gaining momentum, driven by a desire for greater financial independence and security. It's a direct response to the perceived weaponization of the dollar. Countries want to protect themselves from potential economic vulnerability. They no longer want to be beholden to the US financial system. De-dollarization is not just a theoretical concept, it's happening right now on a global scale. Let's look at some concrete examples. The Association of Southeast Asian Nations, or ASEAN, is a powerful economic bloc. Its 10 member states represent a market of over 600 million people. In a significant move, ASEAN announced plans to de-dollarize cross-border trade. They aim to use local currencies instead, boosting regional integration and reducing reliance on the dollar. Barter systems are making a comeback. Countries like Iran, Thailand, and Pakistan are increasingly using this ancient form of trade. They exchange goods and services directly, bypassing the need for dollars altogether. It's a practical way to circumvent sanctions and reduce dollar dependence. Cryptocurrencies are entering the scene. Bitcoin and other digital currencies offer a decentralized alternative to the traditional financial system. They operate outside the control of any government or central bank, making them attractive to those seeking to avoid US scrutiny. China, the world's second-largest economy, is playing a pivotal role in the de-dollarization movement. At the heart of its strategy is CIPS, the Cross-Border Interbank Payment System. Launched in 2015, CIPS is China's answer to the SWIFT system. SWIFT, the Society for Worldwide Interbank Financial Telecommunication, is the backbone of international dollar transactions. But it's heavily influenced by the US. CIPS offers an alternative. It allows for direct yuan-denominated transactions, bypassing the need for dollar clearing. This is a game-changer for countries looking to reduce their reliance on the US financial system. Think of it as a parallel system, one that operates independently of SWIFT and the dollar. It's a way for businesses and countries to trade with China and other partners using the yuan, strengthening the currency's global standing. CIPS, a closer look at the numbers. The growth of CIPS has been nothing short of remarkable. Let's delve into the latest data as of January 2025. Direct participants. 169 financial institutions have direct access to CIPS, allowing them to send and receive yuan payments directly. Indirect participants. The network extends far beyond direct participants. Over 1,467 banks across the globe participate indirectly, connecting through correspondent banking relationships. Global reach: CIPS now spans 119 countries and regions, covering over 4,800 banking institutions in 185 countries and regions. This demonstrates its expanding global footprint and the growing demand for yuan-denominated transactions. These numbers tell a compelling story. CIPS is rapidly gaining traction, attracting participants from all corners of the globe. It's a testament to the growing appeal of a multipolar financial system and the desire to explore alternatives to the dollar. China's balancing act: navigating de-dollarization. China's push for de-dollarization is not without its complexities. While advocating for a more multipolar system, China itself remains heavily integrated into the dollar-dominated system. A significant portion of China's massive foreign exchange reserves, estimated at over $3 trillion, is held in US dollar assets. This creates a dilemma. Pushing too aggressively for de-dollarization could potentially undermine the value of China's own holdings. China is walking a tightrope. It's gradually reducing its reliance on the dollar by diversifying its reserves. This includes increasing its gold holdings and exploring investments in other currencies like the euro and the yen. However, finding suitable alternatives to the dollar's depth and liquidity remains a challenge. The eurozone faces its own economic uncertainties, and the yen's appreciation potential is limited. A historical perspective: the rise of the petrodollar. To understand the significance of de-dollarization, we need to rewind the clock to 1974. This year marked a pivotal moment in financial history, the birth of the petrodollar system. The U.S., under President Nixon, struck a deal with Saudi Arabia, the world's largest oil producer. The agreement was simple yet profound. Saudi Arabia would sell its oil exclusively in U.S. dollars. This agreement had far-reaching consequences. It created a global demand for dollars. Countries needed dollars to buy oil, cementing the greenback status as the world's reserve currency. The petrodollar system has been a boon for the U.S. economy. It has allowed the U.S. to run large trade deficits and finance its spending with relative ease. However, this system is now being challenged as countries seek alternatives to the dollar. The future of finance, a multipolar world order. The de-dollarization trend raises intriguing questions about the future of global finance. Are we witnessing the dawn of a new era, one where the dollar's dominance fades and a more multipolar system emerges? The answer is complex and likely to unfold gradually over time. The dollar's deep liquidity, well-established financial markets, and the inertia of existing systems mean it won't be easily dethroned. However, the momentum behind de-dollarization is undeniable. CIPS is just one example of a growing ecosystem of alternative payment systems, digital currencies, and regional trading blocks. Imagine a future where global finance operates on multiple tracks. A dollar-based system might coexist alongside a yuan-based system, with other regional currencies playing a more prominent role. Digital currencies, backed by assets like gold or commodities, could emerge as new contenders, challenging the dominance of traditional fiat currencies. The future of finance is likely to be more fragmented, with multiple centers of influence. Conclusion: de-dollarization and a shifting global landscape. De-dollarization is more than just a technical shift in currency markets. It's a symptom of a larger geopolitical transformation. The world is moving away from a unipolar system dominated by the U.S. towards a more multipolar order. The rise of China, the growing assertiveness of regional powers, and the desire for greater financial independence are all contributing to this shift. CIPS is both a driver and a symbol of this transformation. The de-dollarization process is likely to be gradual and uneven. The dollar's dominance won't disappear overnight. However, the trend is clear. The global financial landscape is being redrawn. As the world navigates this transition, one thing is certain: the era of unquestioned U.S. dollar hegemony is fading. The future of finance will be characterized by greater competition, diversification, and a rebalancing of global economic power. As we conclude our journey through the shifting tides of global finance, it's clear that de-dollarization is more than just a technical shift in currency markets. It's a symptom of a larger geopolitical transformation. The world is moving away from a unipolar system dominated by the U.S. towards a more multipolar order. The rise of China, the growing assertiveness of regional powers, and the desire for greater financial independence are all contributing to this shift. The de-dollarization process is likely to be gradual and uneven. The dollar's dominance won't disappear overnight. However, the trend is clear. The global financial landscape is being redrawn. As the world navigates this transition, one thing is certain: the era of unquestioned U.S. dollar hegemony is fading. The future of finance will be characterized by greater competition, diversification, and a rebalancing of global economic power. Thank you for watching. If you enjoyed this video, please like, share, and subscribe to our channel for more content.